take the discussion on markets forward with a very new face, a fresh face coming in on our show today after a long time. On this show, at least, Alder Capital's Rakhi Prasad is here. They run a strategy which is concentrated and focuses on consumption. Rakhi, afternoon. Thank you so much for joining us. I was just talking to a colleague of mine how one category of consumption, which is alco bevs, have done phenomenally well after a long time in India. Radicos at 1400, their products gaining market share, all of that. Soam distilleries, even United Spirits, after a couple of quarters or difficult quarters, finally premiumization seemed to be doing the trick. The stock is above the 1000 mark, 400, almost a big margin expansion there. After a couple of quarters, that's happening. Let's start our discussion on consumption-related stocks from this side of the market, this segment of the market. Sula also, almost the same, kind of a category, got good response in the IPO and follow-up buying by funds once it got listed. How do you see this alco bev side of the consumption basket?
Thanks for having me on the show, Ajay. So from the alcoholic beverages point of view, I mean, it's trending the same way that we're seeing other consumption sectors where premiumization is doing better than mass market segments. So even if you take some of the premiumization stories within the alcoholic beverages businesses, you will see that the focus has been more on these higher priced categories versus the popular type of categories that the defocus has gone on. So it's a story across the board in all types of consumption subsegments, where premiumization is doing far better than the mass market brands. And now with the earnings also catching up and growing, it's primarily because inflation for these businesses has come off, wherein gross margins are improving. And so earnings will come through.
Which part of the consumption basket are you more bullish on, Rakhi? Because as you just said, that premium side is doing well. Up till now, rural and semi-urban was not doing well, but early signs that they are also turning around. How are you playing your portfolio?
So our portfolio still focuses a lot more on the urban and the premium side stories. Urban though, rural though has slowly started showing some green shoots. We're still not comfortable from a broader perspective that the rural story is here to stay for a longer period of time. We still want to see how this monsoon plays out. But in terms of the question around what are we more bullish around, subsegments. So when we look at consumption, we have 21 subsectors across discretionary products and services, financial services, essential products, and essential services. So the segments that we are seeing more growth in at this point in time are in the discretionary products and services segment, and in some parts of the financial services as well. So wherein we are bullish around NBFCs, we are bullish around segments such as consumer tech, though it's a little bit contrarian at this point of view, and also in segments like travel, hospitality, and some parts of the auto sector.
Rakhi, that's an interesting one. Consumer tech. Do you like, Policy Bazaar variety, or do you like, Zomato variety? What exactly? Do you like beauty products, which is getting much more competitive, online platforms? What consumer tech category do you like?
So when we talk about consumer tech, we're primarily looking at businesses that are profitable, that are platform-related businesses, that have very good network effects. So it's very important when you're analyzing these types of businesses to understand what are the network effects that the business has. So network effects has a variety of flavors, wherein it's easy for people to understand the two-sided network as a classified business versus a Zomato type of business, which is a three-sided network, which has delivery, restaurants, and consumers, which is a stronger network effect. And then you have the highest form of network effects, wherein your frequency of usage of that product or service is very high. So for instance, a payments type of business would have the highest form of network effects because you are constantly using that, the active usage of that service or app will be highest amongst all these categories.
Rakhi, I'm curious on NBFCs. There is one side of the NBFCs, the Spandana Spurti Fusion, it's a variety, the MFIs have done phenomenally well on the earnings side. Then there is the technology-backed NBFCs, the Bajaj Finance, Poonawalla Finance, Ugrow Capital, which is going to MSME and consumers as well, both. But technology is their backbone. Or then the legacy housing finance type of NBFCs. What kind of NBFCs are you most bullish on?
So right now, things that we are actively looking at are especially affordable housing. So that's an NBFC segment that got beaten down in the recent past. And we're seeing, especially with the whole inflation coming off, maybe interest rates have now stabilized or might come off in the next 1 to 18 months. This segment will probably do better in the coming medium term, 1 to 3 years time. So that's a segment that we are actively looking at. MFIs have done extremely well already. And as I said, we are still not convinced yet about the rural recovery sustaining. So we want to see a couple more quarters of that happening before we declare that MFIs have come out, which they've already come out. I mean, they're showing collection efficiencies of 98, 99%. But then when it comes going forward, will it sustain or not sustain is what we are actively looking at. But besides that, I mean, as you mentioned about the technology-backed NBFCs, those are NBFCs that have shone in this sector versus the overall credit growth of only being 15 to 16%. I mean, they have far exceeded that growth in advances.
Rakhi, how did you read the commentary coming from India's largest consumer company, HUL, last evening? And in that light, how do you see the peers as well? ITC, for that matter, Barrico, Dabur, all of these. Do you think there is merit to look Jyoti Labs? Is there merit to look at that consumption basket also, or not yet expensive?
So FMCG as a proportion of our portfolio is barely 5%. So that kind of alludes to the fact that we are not very bullish on this segment. Now, what HUL shared last evening was something that we have been saying for a while, in the sense that the volume growth has still not picked up. It's barely 3% volume growth for HUL, for instance, and for the industry as such. Even though rural has turned in the positive volume growth, has turned positive this quarter in terms of volume growth, it's still not crossed its pre-COVID levels in terms of what one was seeing. So again, I mean, as these broad-based FMCG segments determine or are based on the fact how, as an economy, especially in the rural and low-income, semi-urban sectors do, they will impact how these businesses will grow. So having a top-line growth of barely mid-single digits, it's not very exciting when we are, as an economy, growing at 6-7% GDP, and if you add inflation, about 3-4%. So we are trying to focus on businesses that deliver more than 10, 12, 15% revenue growth at least.
Fair point. Just one last word on auto. You mentioned autos. How are you playing auto? Two-wheelers or four-wheelers? Both are actually doing well and come back quite a lot because of the new launches and volumes improving.
Yeah, and I think so directly we're not playing any of the two-wheeler, four-wheeler segments, but we are playing businesses that are catering to these segments. Essentially, even if we say the whole auto segment might grow in single digits volume this year, from its at least four-wheelers did fantastic last year, but this year it doesn't. We're not seeing it grow higher than single digits. There are many players around who are catering to these segments that actually are growing faster. So that's the area that we are more focused on rather than focusing on a two-wheeler or a four-wheeler player as such.
Right. All right, Rakhi, we'll let you go on that one. Thanks so much for joining us on the show.
Thank you for having me.
That was Rakhi Prasad talking her the way they are approaching the market and investing.